The number one way of building wealth for long-term growth is you want to buy things, your long-term investments, when they're going down and when they go down further. So this is what a lot of people do to build wealth, and we're talking about the day because this is Bitcoin here. Show you a quick thing here. So this is back in April of this year, 2021. It was up at about 63,000. As you can see, it plummeted all the way down here, and then it went all the way back up, and it actually went up to about 67,000 just about. So, and it's continuing to go up here. It's a little bit low, but let's talk about that and why it's so important if you want to build wealth long term. So if you have investments, whether that be stock investments or cryptocurrency investments, whatever it is, the whole purpose is that you're holding it for a long term. You're not trading it. You're not, trying to buy at the best opportunity so you can make a money, over a day or a few days or maybe like a week or two. No, we're talking about for long term. So for me, I don't, trade cryptocurrencies. That's not what I do. I'm buying for a long term. So for example, as you saw in the chart there, the number one way to build wealth is you buy it when it's going down, or when it's, the type of mindset is when a lot of people are buying it, that tends to be when you want to sell it. And when a lot of people are selling it, that's when you want to buy it. And the reason for that is, you see, when the price goes down, a lot of people are selling it, which means you want to buy it because if there's something for a long term, then it's going to be going up. But when tons and tons of people are buying it and the price is sky high, if you want to, lock in some profits there that you make, you could sell some there and just keep the profits that you make and then put that money back in when it goes down, if that's your sort of thing. But I have long-term stock investment account. I have some cryptocurrency accounts, and when I see the price plummet, I see the price drop down dramatically, I'm going to put in some more money into that asset because, as you can see, the price ends up going back up. And you want to find things that are not necessarily stable, because cryptocurrency is not stable. It's very volatile, but things that you believe in that are going to continue to go up. So I'm not saying here buy, Dookie coins, buy the cryptocurrency Dookie coin, because that's, as you know, it's a load of S, essentially. You don't want to buy stuff like that. Not only that, if you're investing in stocks, you don't want to buy a company that is failing, that is a bad company. Companies like Apple and Microsoft and Google and Amazon, even if you don't like those companies, those are companies that are very good for long-term growth because they have a lot of money. They continuously come out with new innovative products. They're continuing to grow and expand. So, like if you see Amazon stock plummet down, it's like, oh my gosh, now it's like the perfect time to buy some of this. You buy some and then it just goes right back up. So when it's long-term, that's the type of mindset you should be having. You don't want to be one of these types of people where you're buying at the top and you're selling at the bottom. You buy it when it's like at the very top, and then you see it go down and down and down. And it's like, oh, I'm losing so much money, I got to sell it. And then the moment you sell it, it reverses and goes back up. Because it's very important for your financial future, financial independence, that if you want to build wealth, you buy things when they're on a discount, when things are down. You buy more, you accumulate more. So then when it starts to go back up, you have more to gain from it. And then, we can talk about stock investing when you get paid dividends, or you're getting paid interest off of your cryptocurrencies, which some, websites and accounts have. You can put your cryptocurrency in there, and then you earn a percentage from that. So there's multiple different ways of going about that. But ultimately, if it's for long term, find some assets that you are comfortable with holding for long term. And it's one of those things also, it's like, maybe you will lose some money, maybe you will gain some money, maybe things will be really good for you, maybe some other assets may not be so good for you. It all depends. But here's a good way of putting it. So when you work a job and you're putting money into like a 401k or some sort of retirement plan, that goes into the stock market. That goes into, index funds and certain funds that follow the overall stock market, because overall the stock market goes up and up and up and up. That is the general trend of it. There will be crashes from time to time. There will be weeks, months, even years that it may not necessarily be really good, like the crash that happened in 2008. And perhaps a looming crash now, who knows? But overall, if you look at a trend of it, it continuously goes up. So if in 2008 you had already had so much money invested in there and you lost a bunch of money, you don't want to sell it and lose all that money. You want to put more money in there. And here's another good example. I started investing in 2019. Actually, I think it was 2019, maybe 2018 or something. I forget exactly. But I had put a decent amount of money in. And then when the COVID crash happened in early 2020, I was actually in the negative on everything. It's like, oh my gosh, I lost this amount of money. I'm not going to sit here and sell it. Instead, I put more money into it. It's like, oh my gosh, this is like the best buying opportunity. Put a ton of money in, and then it just went sky high. So that is the type of mindset. When something sells off really fast, really quickly, you want to put that money in, and then you just watch it go. Sometimes when you're looking at the chart, you don't even have to look at the chart. But if you're down, you want to put some more money in. And this is the beauty of if you are working a job and some money comes out of your paycheck for your retirement plan, because automatically that money will come out and buy your stocks and your funds for you. You don't even have to look at it. So essentially, you're buying it every 2 weeks or every month. And you're putting money into it, so if things are going down, you could be buying at a good opportunity. But if you're doing it manually, then that could be a little different there. But it is such an interesting thing, it really is. So always remember that. If you want to build wealth with your investments, you want to buy it when it goes down, because it may not make a lot of sense, but it makes also perfect sense, because you're buying it when it's low, and then it goes up, and then you're making more money, as opposed to, oh look, Apple stock's $300, and then it goes down to $200. Oh, perfect buying opportunity, but it's like, no, I'd rather buy it at $300. I'd rather buy it when it goes back up to $300. It doesn't make sense. It doesn't make sense. So that was it. Just let me know what your thoughts are. Let me know what sort of investments you have here. As you know, I have stock investments and crypto investments, and I tend to try to buy it when it goes down a lot. So that's just my take on it. So you all take care. Have a great one. And I'll catch you later. Bye-bye.